Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for a cautious start due to the prevailing risk-off sentiment globally after the three consecutive session rally that the Wall Street has witnessed thus far. GIFT Nifty signals a muted start for Indian equity markets. Key mark of 19,400 would be eyed. Wall Street ended slightly higher after rally as a Fed speaker's treasury auctions eyed. Essentially, Fed will be meeting in later this week. The guidance is expected this week, so bit of risk-off sentiment ahead of that. Asian shares fall on Fed pause doubts. In fact, investors await Fed guidance on rate hikes this week. Federal Reserve is expected to keep option open on rate hikes. FIIs offloaded shares to an extent of 549 crore and DIIs have bought shares to an extent of 595 crore. In terms of what we have for the FNO space and the FII behavior, well, FIIs have been the net buyers in the index futures put together. Along with that, they've also bought in stock futures. They've been buyers in Bank Nifty futures too. So they've been buying in futures and they've been selling in both Nifty and Bank Nifty options. What still remains in ban is GNFC. Nifty PCR 1.14 versus 0.96. Essentially, these are some of the trade setup that we have, but let's discuss more of the strategies for the day along with Aamar Dev that we have today morning. Morning there, Aamar.
Yeah, very good morning.
All right, your initial assessment on the trade setup, what levels are you really looking for? You think 19,400 mark, would we witness some amount of consolidation in today's session, or you think it's going to be an extension of the rally that we've seen thus far?
Yeah, I would say that Nifty would meet with resistance somewhere around 19,450, 19,500, technically speaking, because that's a level to watch out for post the sharp pullback that we have witnessed. Because on the medium-term charts, it clearly shows, because all have across different time frames, we've seen the markets bounce back from oversold territory and also around crucial support zones. So what I see is that we could witness some sort of consolidation around the 19,450, 500 mark, because that's a level to really watch out for. Because if Nifty starts sustaining about 19,500, then the next level for Nifty would be around 19,750, 800 levels. And also what we're seeing on the derivatives data, that for the last couple of days, we've been witnessing short covering, because what has happened that the shorts got trapped and they did not anticipate such a fast up move from the lows. So that's one area. So we'll have to see whether the short covering continues or we see some sort of long built up happening, but long built up more likely to happen above the 19,500 levels, because that's the level which the markets are closely watching at.
Sure. Aamar, we're going to get back to you, and we were anticipating some cautious start coming for the markets, a bit of consolidation perhaps around those levels. 0.1% of losses coming in on that one. Nifty 50 right now is trading below that 19,400 mark. Remember, those were the levels that we were looking for, and that the market right now is below that. So just in line with what we were anticipating, it is a cautious start coming in for the markets, and the losses are just getting widened. 0.2% of losses coming in for Nifty 50. Talk about Bank Nifty, just to see if the weakness has also been witnessed for that one. Trend is no different. 0.3% of losses clocked in early deals. Let's talk about the mid cap and the small cap index, just to see if there is some degree of outperformance there. A flat trend for mid cap index with positive bias thus far. Let's talk about small cap, just to see if outperformance is there. Well, we are looking at Nifty small cap index is what we were looking at. But right now, if you even look at the BSE small cap index, we're looking at gains to an extent of 0.2% for that one. In fact, the trend seems to be a bit of cautious undertone, right? Because Fed guidance this week will crucially be eyed by the markets, and also there have been gains which have come through. So not really a surprise there. Advances 16, declines 33. This is the market breadth right now. But we've started on that 19,400 mark, but quickly slipped on to the 19,370 level. Now advances are updated to 24 versus 26, so it's evenly divided between the advance and decline ratio. Let's talk about the top gainers and the top losers that we have on the screen. And essentially also PSU banks are the one that apparently need to be a bit in focus. Bajaj Finserv and Bajaj Finance, of course, Bajaj Finance on back of the QIP announcement that has come through, and BPCL too. These are some of the top gainers. Along with that, you have Cipla, Wipro and Bajaj Auto. These are some of the top gainers that we have on the list. What we have as losers, that needs to be updated a bit. Well, Divi's Lab, Coal India and Tata Steel. These are some of the top losers that we have. Apollo Hospital, Britannia and Asian Paints. The other ones for you. Clearly, right now we're looking at gainers like BPCL. HPCL is reported in the numbers, and Bajaj Finance too has launched in the QIP that we're going to be talking about in just a jiffy. But we are going to go back to Aamar and check with him his view now that 19,000, the markets are trading below 19,400 level. Does he see further amount of correction creeping into the markets?
Yeah, I would say that these are levels where there would be profit booking as well, because those who've gone long, because that was a good opportunity, those who went long, so they'll be looking at booking profits around this levels, because and the shorts would be more than willing to enter fresh shorts around these levels. So these levels, 19,400, 500 zone, that's a very crucial zone, because that's a level where both the longs would be cautious as well as the shorts would start getting aggressive, because there the risk reward ratio would be more in their favor. Only once the Nifty starts sustaining over the 19,500 mark, consistently closes above that level, starts trading over that level, then we could say, yeah, that now the shorts would start getting slightly more cautious. As far as on the downside is concerned, I would say immediate level for support is around 19,200, 250 zone for Nifty. And as far as Bank Nifty is concerned, 43,700, 800 is the key zone of resistance for Bank Nifty to watch out for. So that's a very good level where shorts would likely to build their positions.
Sure. Aamar, two stock recommendation before we move on to stocks and news essentially.
Yeah, the first stock to look at is Godrej Industries, because this is one stock, if you see, the stock had witnessed a significant rally. Currently, it's in for consolidation. Last couple of days, we've seen some up move. It's around 670, 665 levels. So this is one stock one can look at. So any pullback towards 655, 660 levels can be used as a buying opportunity with a stop loss of 617 and a target of 710 on the upside. And the other stock to look at is from the infra space, that is Tata Power. Again, this is one stock, what we've seen is that it is in for consolidation. Long-term trend remains positive. Currently, it's around 250 odd levels. So any pullback in this stock towards 240, 245 can be used as a buying opportunity with a stop loss of 227 and a target of 279 in the short term.
Sure, that's the word coming in. Let's quickly address also the stocks and news. Stay on with us, Aamar. We're going to get back to you on the stocks which are buzzing in today's session. But the numbers first, HPCL has come out with numbers. Of course, it is a better set of numbers, at least on the operational performance first. The revenue is down by 14% for this one. EBITDA is also down by 14.9%. The margins have improved at 8.6% versus 8.3%, slightly flattish or thereabouts. But the stock is not doing typically too well, 0.1% of losses coming in. Well, EBITDA is ahead on higher inventory gains despite weaker refinery margins. Essentially, most of the brokerages around, at least Jefferies for that matter, has raised in the entire FY24 EBITDA estimates on the better delivery of the first half result. Let's talk about Emami. That's another one that has come out with results. Revenue is up by 6% and EBITDA is almost up by 19.4%. Margins have expanded to 27% versus 24%. The stock right now is doing well, almost gained to an extent of 0.75% out there. Now in September quarter, Emami and also witnessed an expansion in gross margins by 350 basis points, helped by the lower raw material cost and the price hikes which have come in. So that's another one. Nykaa, that's an interesting one that you need to keep an eye out on. New age companies are in focus. And look at the splendid gains that we're seeing for Nykaa. Clearly the stock of the day, 4% uptick there. Revenue up by 22.4%. EBITDA is up by 32%. Margins have come in at 5.4% versus 5%. Profitability is shot up by 41.5%. So clearly, we can also pull up, in fact, some of the new age companies, Zomato, Nykaa, Paytm, just to see how these companies are doing. Essentially, the trend is now favoring these new age companies. Let's look at Zomato. Okay, the stock is right now down and out to an extent of 0.5% there. Nykaa is doing well. Paytm, that's another one that we need to look out for. 197, that's the stock that we're super looking at. Paytm, we're looking at gains to an extent of 0.3% out there. Apart from that, what also will be in focus will be Mamaearth's parent Hunaza Consumer, which is going to be listing today on November 7th, essentially. Final issue price is around 324. The issue got subscribed, pretty good demand on that one, despite the kind of concerns that the company or the street had around the valuation, the issue size, which was curtailed down from the previous time, the strategy, which at this point of time driven more by inorganic expansion. So that's essentially the long and short when it comes to Mamaearth. Bajaj Finance, an important one that we need to mark here. Bajaj Finance has launched in an QIP. The floor price has been set at 7,533. To offer a discount of up to 5% on floor prices. It's clearly the stock which is one of the top gainers. But Aamar, coming on this one, what do you make out of Nykaa and Bajaj Finance? Two different stocks altogether, but stocks which are also doing well in trade.
Yeah, I would say that talking about Nykaa first, what we've seen is that the stock was forming a very strong base around the 120, 130 levels. And currently the stock is trading around 152 odd levels. So what we saw is that earlier also the stock in September, the stock tried to breach the 155, 160 zone. So that's a zone of resistance for the stock. If the stock starts sustaining above the 155 level also, we could see the stock headed towards 165, 170 in the short term, because the stock has formed a very strong base. And talking about the other stock which you mentioned, Bajaj Finance. So Bajaj Finance, I would say this is one stock. The long-term trend remains positive, but we're seeing some sort of consolidation happening in this particular counter. We do see that very strong support is somewhere around the 7,300 zone, 73, 7,400 zone currently. Whereas on the upside, the stock could meet with resistance around the 77, 7,800 zone. But overall, I would say currently clearly shows that there is a loss of momentum in the stock. So the stock could trade sideways in this zone, which I've just mentioned.
All right, Aamar, we're going to leave it at that. And thank you for taking out the time and speaking to us this morning.
Thank you.
All right, let's navigate our conversation to the fundamental side, the potential themes for Diwali. We're on the run-up, essentially, to the crucial special occasion, rather. Let's just put it that way. What are the themes that we expected to be in focus? Which side is the market really moving in, whether it's the large cap or the broader indices, which will continue to dominate? To find all the answers, let's get across to the guest on the show, Mihir Vora, the Chief Investment Officer at Trust Mutual Fund. Well, morning there, and thank you so much for taking out the time to join us this morning.
Good morning. Always a pleasure. Thanks for having me.
Right, pleasure. Mihir, your initial assessment on the way markets can be approached right now, from a very allocation perspective, do you think large caps are expected to dominate the trend going forward, given the kind of valuation correction perhaps that we have witnessed in some of the broader counterparts? Do you think large caps are safer bets at this time?
Sure. Large caps, if you look at the aggregates, if you look at the broad index valuations, large cap indices like Nifty are trading at much more reasonable valuations compared to the mid cap and small cap. So to that extent, yes, there is some safety in the large cap valuations, especially because we do expect decent earnings growth of around 15% for the next couple of years as far as the Nifty is concerned. Having said that, if we expect the economy to grow at 7% plus, or 6.5 to 7.5%, driven by certain sectors which are obviously high growth sectors, then the choices in the large cap as far as stock selection is concerned in these segments are limited. So when you're looking at high growth segments, high growth emerging segments, so to say, you have no choice but to look at the mid and small cap space. So I would say that yes, at the aggregate level, large cap index is more comfortable. But at the stock picking level, I think there is enough scope for stock picking in the mid and small cap space.
What do you make out of the current earnings that have been reported thus far? Do you see any red flags or some worrisome levels in terms of volume and the revenue growth of some of the players out there? EPS growth remains strong in the double digits. What do you make out of the overall top line growth level, rather, which remains at the pedestrian 7 to 8% thereabouts? What do you make out of the current Q2 earnings, and which are the sectors that have stood out for you?
Sure. So I think consumption still continues to be a question mark. And within consumption also, we have seen some kind of a K-shape where the higher end segments are doing better across segments, I would say. And the lower end segments, there is some distress in the lower income segments in the rural economy. The consumption has not rebounded to the extent it was at the pre-COVID stage, so to say. So I think there is a bit of a K-shape in the economy. If you look at segments, for example, in housing, the affordable housing segment is sluggish, but you can say that the higher end ticket sales of large developers in Bombay and NCR are seeing extremely good response. So there's a K-shape, bit of a K-shape there. In FMCG, we are seeing that the premium segments are doing better. In automobiles, we can see that two-wheelers are doing worse than the four-wheelers. And within four-wheelers, I think in the car segment, for example, the higher end SUVs are doing better than the entry-level cars. So I think there's a case where the higher end segment is holding up, but the lower end segment needs to pick up, and that's what we've seen the results also. So if you look at FMCG results, they've been a mixed bag. IT has been a mixed bag. That's more because of global slowdown, and our belief is that the local economy will do better than global. Banking and financials have shown good results. Not much issues on the margin front. Growth is good, and NPA quality issues are not there. So I would say that the global sectors in general and the lower end segments sectors are doing a little worse than the domestic capex linked theme, I would say. If India has to grow faster, then I think we do hope that in the second half consumption also picks up.
Sure. We have seen certain amount of reversal in trend on rising US yields. Mihir, according to you, what would bring FIIs in big way in the Indian equity markets? If you look at the levels of FII in Indian equity market, they've remained static around that 19-20% range in the last six to 7 years odd. Last month, we've seen that sell-off pressure perhaps being a little more intensified for the markets. What do you think can bring back FIIs in a big way? Do you believe that could be possible thing in this year, in the run-up to elections too?
Certainly, because I think, as far as investable markets are concerned, which are also large in size, there are very few options left. In the mid 2010s or the early 2000s, we used to have this term called BRICS, which was Brazil, Russia, India, China. So I think out of those four, I think Russia and China have become almost uninvestable. So it's basically Brazil and India. And India does offer a good domestic consumption story, apart from the fact that we have well-diversified sector exposure. Brazil tends to be a little more commodity heavy, so to say. So I think if you look at the large investable emerging markets in the world, India is shining. And if we do see that the Fed is kind of signaling that we are towards probably the end of the tightening, then we can see stability in the flows, and FII flows should come back. So I think the fact that you are earning 5% dollar returns on a 10-year or a 30-year US bond is drawing some money out of emerging markets back into the US. Dollar is also strengthening because of that. But in the last week or so, we did see the first signs of probably the dollar having peaked out, and that bodes well for Indian markets.
Sure. Mihir, I also want to chat with you about the new age companies which apparently have started showing good set of numbers, be it in the likes of Zomato, be it in the likes of Nykaa, perhaps PB Fintech too, which seems to have a turnaround on the operational level front. Mamaearth would be listing in today. I don't know, how do you look at that one? But within the stack, what do you like and why?
So I can't comment on specific stocks, but just to give you a perspective where we come from is that when the IPOs of most of these companies came in, which was late 2021, early 2022, we were not comfortable with valuations, and we pretty much had very limited exposure in those stocks. Then, of course, we saw that 2022 saw a significant correction, and the companies did take some corrective actions on a case-to-case basis in terms of reducing cash burn, improving EBITDA margins, etc. In some cases, even at the cost of growth. And in some of the cases, we also saw that they went into newer segments. So I think the core belief that India has a large addressable market which can be addressed through digital means remains. A lot of these companies have built humongous franchises in terms of the number of customers onboarded, and there is a case for network effect in some of these large companies which are kind of now dominant in their respective segments. So I would say that valuations have corrected significantly. The companies are adding customers, and they do already have the benefits of some kind of network effects in their business models. So it's a sector that I would now start looking at. And because I think in each of these segments there'll be one or two winners, and if we bet on those, then we can get good medium-term to long-term growth.
Mihir, does the valuation concern be a case of bother or a worry for you even for Honasa Consumer? Because that's also one of the companies where a lot of fears apparently were, a lot of fears were triggered ahead of the IPO on back of the valuation profile of the company. The company did see some amount of IPO size. It trimmed down, valuations corrected a little bit with the price that they offered. How do you look at the counter?
Look, I can't comment on individual stocks, unfortunately.
Okay, all right. That's an interesting one that we'd like to hear, but completely get your point out there. How are you playing the markets, or what are you investing to your investors as a fund house? How can they play Diwali theme, or maybe just few themes that are expected to be in focus from in this somewhat?
Sure. So we are in the process of launching our equity funds. So currently we don't have the equity funds up and running. But if you were to look at the preferences, I think the current theme, which is that of revival of the private sector capex, some traction we are seeing in real estate, and government initiatives like PLI in certain segments, and government capex spending in many of the segments that we will talk about. So broadly speaking, I would say in private sector capex, government aided and government spending in capex, and the real estate theme is probably something that one should bet on, and we can talk about specific sectors in each of these themes. And the second hope, I would say, is that in the second half of financial year FY 23-24, we should see, or we better see some revival in consumption, especially at the lower end, because that will be the real icing on the cake, because then all the cylinders will be firing, except for the globally linked sectors, which we are not that, not that bullish on. So I would say broad theme is that India domestic economy continues to do better than the rest of the world in terms of GDP growth rate for the next 2 to 3 years. Domestic segments like capex linked and government linked spending continue to do well. And the hope is that consumption also picks up.
All right. Anything apart from the themes that you've recommended thus far, anything that perhaps is a lot more interesting, and the earnings perhaps were, they kind of surprised you on the upside? Any themes that you could look at?
So the financials space, especially the balance between NBFC and private sector, I think the first part of the 2020-22 rally saw private sector banks outperforming. Then we saw some kind of catch-up happening this year on the NBFCs. So NBFCs have done well, and some of the private sector banks have lagged. So I would say that there is some value re-emerging in the private sector banks because I do believe that corporate credit should pick up. And if that happens, that again we should be back to some of the private sector banks. So I think financials in general should continue to do well, but there is some catch-up to be done by some of the private sector banks, I would say.
All right, Mihir, we're just going to leave it at that. And thank you so much for taking out the time and joining us this morning. And also, happy Diwali.
Same to you, and wish your viewers the same.
All right, wonderful. We're just going to quickly navigate our discussion now towards an IPO, which is going to be opening in for subscription today. It's an 834 crore IPO, Ask Automotive, which opens for subscription. The company has fixed a price band for the 834 crore offer. The bidding for anchor investor will open in today. Essentially, what does the company do? In fact, for 834 crore of offering, it is a complete OFS only offer. And apart from that, what does the company typically do? It's a Gurgaon-based Ask Automotive with supplies and safety system and critical engineering solution with in-house designing, developing and manufacturing capabilities put together. So that's the long and short of this one. But that's all that we have on this edition. And with this, it's a wrap. And goodbye from the entire team who puts this piece together for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.